Hi, I'm Nicole Urken, Research Director for Mad Money, and welcome to Behind the Scenes of the show. I'm here with Jim Cramer, and we're talking industrial names that are taking their fate into their own hands. Now, Jim, we've seen a very uneven recovery so far this year. And in the industrial space, when we're talking about playing a cyclical recovery, we are looking specifically at companies that are really taking their fate into their own hands and not just being exposed to the macro.
Right. And you know, look, when you look at Eaton and PPG,
yes.
Had Eaton not bought Cooper, the stock would go into 45 on this quarter. Okay, because all the strength with Eaton is, and it ended up going up, is this beauty of Eaton and Cooper. So they decided, you know what, we got to be aggressive.
Right.
And we got to go buy a really good company, and we'll merge, and we'll be more powerful. PPG decided, you know what, the world economy is not good. Let's get rid of our business that is hostage to the world economy. Both these, one guy sells, the other guy buys, but it's all about the same thing, which is a recognition that the worldwide economy is not what they can be hostage to, because the world's changed, and you can't presume that China's going to grow. You can't presume Brazil, Russia, India. This whole theme of emerging markets is called into question right now. And you have to have products the emerging markets want, and not the ones that they take because things are better than expected.
Exactly. And to circle back to Eaton, we always on Mad Money use a bottoms-up approach to get reads on the economy. When we went through Eaton's conference call, there wasn't a lot that was positive in terms of the macro view. But they do have secular drivers, the electrical businesses. They do have this Cooper integration synergy. And these are the things we want to be looking for that will drive the stock higher. Sandy Cutler said it himself.
Well, look, Eaton is about reining in power costs. Now, if you listen to all these conference calls of these companies, the continuing theme is, okay, the revenue line, no. But we have cut costs. That's Eaton.
Right.
Okay, that's Eaton. PPG is very different. What PPG has done is say, okay, what of our businesses are strong? Let's put more money behind them. So PPG is strong. Let's buy Glidden Paints.
Right.
Let's have more of Lowe's Corp, which they don't have right now, and open stores. Let's look like Sherwin-Williams. Housing piping right now is good, but in the end, it's a business goes up and down and up and down, and if it's we just can't depend on the housing cycle. Now, if I had to do it over, by the way, I might have kept that business. But Chuck Bunch is not thinking about now. He's thinking that he's tired of being hostage to whatever industry that is housing, in this case, PVC pipe, where the Chinese can make PVC pipe. Right. See, what he's doing is reacting to our competitors. PVC pipe has historically been a place that you could dump their pipe if you're Chinese. So he's saying, I don't want to compete with the Chinese on this low commodity. They can't compete on the high end.
Right.
Eaton can't, no one can compete on the high end. PPG can't compete on the high end. Let's buy more of the high end. And so in some ways, these companies, exactly what you said, they are about saying, I'm no longer going to rely on the environment. And companies that just rely on the environment do badly.
And in PPG's case, Chuck Bunch in particular has shifted to that specialty model versus commodity chemicals.
Right.
We've said there is a time and place for commodity chemicals companies. When costs go down, they can really surge. We've seen that with Dow in particular.
Right, but Dow in the end's done nothing.
Exactly. So PPG is a company that will deserve a higher multiple because it's shifted to specialty, like DuPont too.
Right, and DuPont's in transition to do that. In the end, DuPont still has this TiO2. It's that whitener business, and PPG has benefited from the decline in the raw costs. But again, the value of PPG and Eaton has been they cut out costs. The revenues have been not that great, and yet the bottom line's been terrific. And then they take the bottom line, they buy back stock, they raise the dividend, all the things we want out of a stock right now.
Got it. Thank you, Jim. These are two companies that have shareholders in mind, PPG and Eaton. These are companies taking their fate into their own hand if you want to play the industrials. I'm Nicole Urken with Jim Cramer. Thanks for being with us.